Finances or lack thereof can either make or break a company or any organization. Finances are needed to buy stock, pay third parties, employees, and any other expenses that are incurred when running an entity. During tough financial periods, however, money tends to fall through the cracks, leading to many companies on the verge of closure or worst case scenario, a market exit. In our last episode, we learned of the resilience wheel during tough conditions. On today's continuing episode, we look at cash management as an important tool to retain cash within an organization with Grant Thornton's managing partner, Kalyanaraman Vijay.
Cash is king. I think all of us will agree. So now, in a scenario like what we are at this stage, where pandemic has really put a lot of pressure on the cash inflows as well, it's very important to look at every segment of the business, right from creditors. Is there a necessity for an expense? If it is not absolutely essential, cancel it or defer it. If a different, more flexible payment arrangement could be done with the creditors, please go ahead and look at it. The same way, a few weeks back during the lockdown, we had actually circulated, this is something which is done by Grant Thornton for free to all the clients and stakeholders. So not only to our clients, anybody could use it. We had done a document in Excel called short-term cash flow forecast. So that looks at every segment of your inflow and outflow so that you get to see the way you look at now, how you're able to project the next 3 months. It's the best guess, but at least you're not leaving it for it to hit you in the last minute. You're just putting your reality lens in front and putting those projections. So creditors is one aspect. The second aspect, again, debtors. It's very important that people pay the dues so that the working capital cycle is successfully running. So where there are challenges, again, if there is a need to give a cash discount and fast track and get the payments in is also something to look at. Is there any of the assets which are not operating in the business but it's just been sitting? It's probably worth a while to see whether it could be refinanced or whether it could be sold so that it brings working capital into the system. It's very important to make sure that the businesses do the needful to protect the health of the business at this stage. So whether it is creditors, stock management, debtors management, timing of purchase of assets, and all these things form part of a working capital cycle. So the crux is very important to make sure that we preserve cash and where required to go back to the banker and have the facilities revised in such a way that there is room for additional funding if possible. During lockdown there are companies who did not have any revenue, but they had to pay their rental, they had to pay their salaries, and utilities have to be paid. So for which there is a need for either additional funding to be introduced by the shareholders or bring additional funding. So it's a whole package which needs to be looked at from a cash management cycle.
As a critical part of every business, during the COVID-19, even other difficult times, how can companies retain cash so that they're able to have that cash flow?
This is the aspect of cash flow planning, and it's quite important to be realistic and practical about facing the reality. So a complete cycle of a company's landscape of how the cash spend is happening and what drives revenue has to be done a detailed introspection. And that's what I was just covering, whether it is preserving the timing of payment of creditors, engage with your landlords to say how best can the rental can be revised. Very important to look at both sides in any cash flow management aspect. If you look at only from one side, the other person also faces the same challenge. So it's equally important to look at practically from both sides and agree a realistic base. When your customer or supplier is able to get that comfort that yes, I trust what is happening and I believe that the arrangement which is done is a short-term arrangement to allow the business to recover, very likely that they would all support in the whole process. And the same thing applies to employees as well. The way you say that are not able to pay the salaries depends on, again, the way the employees receive it. If it is a no-go, certainly I think it's very important for businesses to say that this is the time we protect our people. And our people are the most important assets for our company and for its future. But having said that, if situation is beyond control where people are not able to affording to pay the full salaries like casual, it's important to engage with the employees and be transparent in the process. So I would say two important things is trust and transparency is quite critical in the current situation and any time, to be honest. And this should flow into the reflection in terms of the projections which is being presented, so that we have a realistic picture. Yes, if revenue is not kicking in next year, we cannot, next month for example, we just cannot sustain even paying our rental. So what is the backup plan? What is the second plan? Is there a need to look at selling any of the non-operating assets to bring into the business as funding, or do we look at refinancing any one of our other personal assets? All these aspects, there is no one answer for that. It is unique to each business. So the business will have to do a reflection. And when they need support, that's where advisors like Grant Thornton come into play, or your bankers. Go and discuss with them, have an open discussion so that you get an insight of how the experts look at it as well and take a call. But you should be the owner of your projections than being an advisor or somebody else who's saying this is done for you. It will never last. It should be something which the promoter, the business owner, the senior management take full ownership and believe in it.
Cash forecasts, financial forecasts, like you're saying, make part of a normal business environment. But then in this instance where we don't have any amount of certainty about how anything is going to turn out, how can those be achieved?
I would say it is the perspective. Again, I just heard a very interesting view from one of the talk shows. They were saying typically a person comes in and says he's been deputed into a country to sell footwear. And then the person comes and says, nobody in this country is wearing footwear, so I just can't do anything about it. The other person in the same scenario said, nobody is wearing any footwear, please send me loads and loads of it so that we can make the best out of this whole thing. So it is the perspective of how people look at it. We can easily say it's the end of everything, we can't proceed any further. Or look at it, it could be meaning that one of the business units is not relevant anymore. Concentrate more on the other business unit which looks more active going forward. So it's a matter of detailed introspection in terms of what is the relevance of our business model pre-COVID and how do we revise it in the current scenario and how do we embrace the opportunity in front of us. I think it is a choice of the businesses to take it. And I would not say that it is all gone. That's surely not the case. This is that whenever there are challenges like this, that's where the new superstars emerge. And I'm sure it is very good time for Botswana to look at having new superstars come out of the stage. And I'm certainly looking forward to our private business growth awards when it comes next year to see a lot of success stories coming out of COVID.
Remember to continue adhering to the COVID-19 pandemic guidelines to wear your mask, wash your hands with soap, and use your sanitizers where possible. We have come to the end of this week's episode of First Issues. Until next time, keep well and keep safe. Good night. This program was brought to you in association with First National Bank of Botswana.
FNB, how can we help you?